Want to increase the quality of your portfolio with a Dividend Aristocrat? Looking for a market-beating yield and a double-digit dividend growth rate? Would you like to know about a stock that I recently bought? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. I'm a die-hard dividend growth investor. This is a strategy that allows you to have your cake and eat it too. High-quality dividend growth stocks allow for returns that often beat the market over the long run. And you get to collect safe, growing dividend income along the way that also often beats the market. Eat that ever larger pile of dividends while the wealth cake grows and grows. You really can't beat it. Within the universe of all dividend growth stocks, Dividend Aristocrats are the cream of the crop. These are stocks that have increased their dividends for at least the last 25 consecutive years. Only truly great businesses can execute so consistently for that long. And one Dividend Aristocrat recently caught my eye and my capital not that long ago. Today, I want to tell you about a Dividend Aristocrat that I recently bought. Ready? Let's dig in. I already have quite a few Dividend Aristocrats in my personal stock portfolio, a portfolio which has well over 100 positions in it. But there are more than 60 Dividend Aristocrats in existence, and many of them fly under the radar. Despite many Dividend Aristocrats flying way under the radar, they continue to absolutely kill it. And when I say kill it, I mean that in every possible sense. They kill it at the business level, the dividend level, and the stock level. One Dividend Aristocrat is doing all of that, and I welcomed it into my portfolio with open arms. The stock that I recently bought is A.O. Smith Corp., stock ticker AOS. A.O. Smith? Who? Exactly. When's the last time anyone talking about stocks brought up A.O. Smith? So many of these really high quality businesses just don't get the kind of attention they deserve. But that doesn't matter because the business continues to perform at a high level anyway. Before we get into that performance, let's talk about what this company actually does. A.O. Smith is one of the world's leading providers of water heating and water treatment solutions. I love investing in underrated, boring companies that are basically part of the backbone of our global economy and society. These companies are the nuts and bolts of the world, if you will. I've said this before in many of my videos, and I'll say it again today. Water is the liquid gold of the 21st century. If oil was the liquid gold of the 20th century, water is the liquid gold of this century. And if your portfolio doesn't have exposure to water-related products and services, I think you're making a huge mistake. We can't live without reliable access to clean water. It's critical to everything we do, including, staying alive. This company is a piece of that global complex, and they're making a lot of money from their position. How much money? You might be surprised. Check this out. A.O. Smith has nearly doubled their revenue over the last decade, with annual sales now bumping up near $3.5 billion, and the company is guiding for $2.88 in earnings per share at the midpoint for this fiscal year. That's more than 3 times the earnings per share from fiscal year 2012. Like I said, Dividend Aristocrats are the cream of the crop. It's always funny to me, a lot of investors seem to be under this mistaken impression that Dividend Aristocrats can't or don't grow, which is silly. How do you think they got in a position to grow their dividends for decades on end? The company just released its Q3 results on October 28th, and what a doozy. They hit a home run, guys. Revenue is up 20.3% year over year. Earnings per share increased by 26.2% year over year. Oh, and they also increased earnings per share guidance for this fiscal year by 5% at the midpoint. I mean, are you seeing those numbers? You might think that decades upon decades into business growth that there'd be some kind of slowdown. Well, you'd be wrong. This company is firing on every cylinder, and that translates over to the dividend too. A.O. Smith has increased their dividend for 28 consecutive years. In fact, they just increased their dividend less than a month ago by 7.7%. The 10-year dividend growth rate is an outstanding 21.9%, so this most recent dividend increase was actually a bit undersized. With their recent revenue and earnings per share numbers though, I suspect that the next dividend increase will be a whopper. While the stock's yield of 1.5% beats the market, this is really more of a long-term compounder than a current income play. And with the dividend only sucking up 38.9% of this fiscal year's earnings per share at the midpoint, the dividend is positioned to grow at a high rate for years to come. I mentioned that this stock is a long-term compounder. Well, that's understating it. The stock is up by more than 650% on price alone over the last 10 years. Before even factoring in dividends, it's compounded at an annual rate of 26.8% over the last decade, which would have turned a simple $1,000 investment into more than $10,000 today. This level of long-term compounding is generally reserved for only very high-quality companies. Hint, hint, this is a very high quality company with excellent fundamentals across the board. They're a leader in an industry where you want to be a leader. They've steadily reduced the float, improved margins, and kept the business fiscally responsible with a fantastic balance sheet. Regarding that last point, they have about $106 million in long-term debt. That's on a company with a market cap of $11.9 billion. They're nearly debt-free. I like this stock so much that I decided to plunk down some of my own cash and buy it. I initiated a position in the business on October 26th, just before they released Q3 results. I picked up my shares for $66.58 each, and I alerted my patrons to this move in real time. It's now well over $70 a share as their blockbuster Q3 report sent the stock skyrocketing. Even after that post-earnings explosive move upward, I don't see the valuation as unreasonable. Shares are trading hands for a price-to-earnings ratio of 25.9. That's not crazy high for a business growing at over 20% per year. We're talking about a PEG ratio that's slightly over 1. Furthermore, the stock's own 5-year average price-to-earnings ratio is 26.1, so it's right in line here. We can see that it typically commands this kind of earnings multiple. It's not as cheap as it was when I picked up my initial tranche of shares, but it doesn't look expensive to me either. The explosive move up is a bit frustrating when you're trying to accumulate shares, but I really like this stock here. Even though I'd rather see a stock drop while I'm buying it, which gives me the chance to average down and buy more shares at lower prices, this is a stock that I think is worth continued accumulation. The Q3 report gave us a look into how the business is doing right now, and I found nothing to complain about. Simply put, the company is operating at a very high level, and the stock is following suit. I plan to buy more. If this stock isn't already in your portfolio, take a good look at it. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this Dividend Aristocrat. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.